Good Thursday morning, everyone, and welcome back to another video. I apologize. I had planned to do these a lot more often as I was doing them in the spring during the heat of the COVID crisis. And as the summer got on and it got warmer and nicer, I have been derelict in my duties, so my apologies. But I promise that between now and year end, there will be plenty of videos coming. So first and foremost, well, maybe not foremost, but if you like what you see, please give me a thumbs up on YouTube. And what really is first and foremost, I hope you personally are staying healthy and sane and getting through this. It definitely feels like, even though the news on COVID isn't so great, it certainly feels a whole lot different than it did in March and April when there were so many unknowns. And as I keep saying to friends and clients and family, the difference is now we know a lot more about the virus. We know what to do and what not to do. So I think we know that not everyone's going to die. We know the virus doesn't have a high mortality rate. And we know that intubating people early on is typically or hasn't been the best solution. We know that washing our hands and staying away from people, but first and foremost, I think many people know that wearing masks definitely helps, or stay away from people. That helps obviously as well. As I'm coaching both Little League and girls high school softball, it's a little more challenging. The rules are a little different, keeping people away from each other. And in the Little League side, we have to wear a mask the minute we get out of our car on property until we get back into our car. So I'm always in sunglasses because I don't like getting pollen in my eyes. And when the sun's out, I end up squinting and get headaches. So with the mask and sunglasses, it's a little more difficult, but I will trade that any day to try to keep my kids on my team safe, and obviously myself as well. So with that in mind, let's continue on to today's topics. I'll probably cover short-term market views, which I've written a lot about on the blog. I get a lot of questions and comments from people that they're not getting the blog the 3 or 4 days a week I publish it. So if you do not get the blog, if you go on to investfortomorrow.com and go under insights, you'll see the blog. When you go on the blog, there's a button on the right side where you can be notified as often as blog notifications come out. So all you have to do is fill out a little form that will automatically go to our CRM, and you'll get an email the 2, 3, 4 days a week that I post something on the blog. So if you want to get the blog more often, just fill out that form. Otherwise, to the big list of people who don't want the blog 2, 3, 4 days a week, I'm trying to share it with you when I have the most relevant, more important, timely items and topics. So let's talk about the market in the short term, and maybe I'll share my screen a little bit if I can do this on the fly and think about things that I want to show you. So as you know from reading anything I've written since, I don't know, late July, I've my normally Pollyannish, maybe naive, but certainly positive self, optimistic self. Haven't written that many optimistic articles in the last, 2 months. And that's because I've been really concerned about the crumbling market foundation. I see a handful of stocks going up, 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 up. And you all know the ones. They're Apple and Amazon and Facebook and Google and Netflix and Tesla and Nvidia and Zoom. And you know the stocks. There's a dozen stocks or so. They're going up, up, up. And the market's foundation was crumbling. Most of the stocks were rolling over and going down. That is not healthy. That is reminiscent of late 99, early 2000. Now, before you automatically say, whoa, he's calling it a bubble, I'm not. I've said it all along. This is not a bubble. This is not a bubble. This is not a bubble. Stocks are not in a bubble. They went way too far, way too fast, and the rally didn't broaden out. That was the rally's main problem. So as I started to warn about this in late July and then August and early September, It only takes the slightest bit of friction to roll the markets over. So we saw already that the indices are down. I'm going to round it to roughly 10% from their highs. End of the world? No. We had an enormous rally in stocks since the March 23rd low, and it's time to give a little back. Seasonally, so the current week, which is the week of September 21st, seasonally, this is the weakest week of the year. So I wouldn't trade just based on a seasonal like that, but it's a headwind, and we'll get by the headwind. There's also, which I've written about in the blog, you can go back and read my articles. People assume that market volatility explodes into presidential elections. It's not true. The data don't bear it out. I don't care what they say on TV. It's not true. It's pure made up nonsense. So if you turn on Jim Cramer and hear him talk about, he said in August is supposed to be a really bad month. No, he didn't do his homework. The data didn't support that. And by that, I mean, if you look at years where an incumbent president is up for re-election, so Trump, Obama, Bush, Clinton, Bush, Reagan, in those kinds of years when an incumbent can run, markets are not typically volatile August, September, October. If this year is, it may be a precedent setter, it may be an outlier, but we typically don't see a large decline in the 3 months leading up to the election. 10% was about as big as I saw going back to, I think, Eisenhower. And we just saw 10%. Could we go a little further? Yes. But let's not accept that election year markets are unusually volatile. 2008 was, right? That was a horribly volatile year. And around the election time, because Lehman was unraveling, it had nothing to do with the election. And as we know, the media keeps telling us this is the most consequential election of our lifetime. Well, every election is like that. So be very careful. Base your decisions on facts and data, not on speculation, supposition. I think that will keep you, doesn't mean you're going to make money, but I think when you lose or when you're wrong, at least you have something to fall back on and base it on versus something in here. That's my heart. Some people say I don't have one, but I think I do. So base it on facts, look at history, see where we are today. So on September 24th, if you follow me on Twitter, you know this morning I thought this morning's open, which was down big, was buyable. Now, did I think the market bottomed today on September 24th and is going to rally end of the year? I don't. Right now, the evidence does not support it yet. I'll look at what happens day by day, but right now my thinking is that the Dow, the S&P, the mids, the smalls, the NASDAQ could have a rally and should, frankly, bounce from here and then roll over to see lower price lows in mid to late October. So if you are sitting here and you stuck nails and needles in my fingers and my toes and said I had to call what was going to happen, I'd say market bounces from here, we roll over again, and the market sees a bottom sometime, I'll say mid to late October just to give myself some wiggle room, but ideally second, third week of October, if I really want to put myself in a corner, I will probably change that. So make sure you read the blog, and so if you're that curious. But I think stocks will bounce, we roll over again, we make a new low before the election. Before the election, I think we make a low, and then we rally. Now, 4 years ago, I talked about our election model, which picked every single election right except for 1992. 1992, it chose Bush, and it was clearly wrong. But it chose Trump in 16, and you can go back. It's chosen everybody correctly. I will have that out when the model works its best, when it's most accurate, which is the Friday before the election. My opinion, which is far different than what we're going to base fact on, my opinion is that Trump is leading on election night and the next day, and then his lead slowly erodes. It becomes too close to call, blah, 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 blah. And Biden ends up being president. And then by by 2022 midterms, Kamala Harris is the president. Okay, that's my purely speculative opinion. I'll have a lot more on the election and some of the most important things. I don't think it matters to the markets if Trump or Biden wins. So now you can all send your emails disagreeing with me. I do not think the markets are going to move all that much, whether it's Trump or Biden. That's not the biggest deciding factor. But we'll come back to that, I promise you, after probably October starts. So stocks should rally. I think what was interesting today, September 24th, is that the NASDAQ 100, which is my proxy for tech and the NASDAQ, did not take out its September 21st low. It made a higher low. Every other major index made a lower low this morning. So what does that tell me? That tells me perhaps the NASDAQ can lead this bounce that I see coming over the coming days. Using coming twice in one sentence, not so good, Paul. Speaking in the third person, also not so good. Let's go on to some other tidbits before I close it off. Gold has been hit pretty hard. And that's because for a while, smart money had been selling gold, dumb money had been pouring into gold. Now, to be fair to dumb money, they were right because they made a lot of money the last $200-300 of the rally, where smart money had turned very negative. But we peaked, roughly $2,000 an ounce in gold and came all the way back down. So I think today, September 24th, and now I'm going to pull up. So I think, as I'm looking at my other screens to my left, gold certainly could have found some interest in the 1850 area. And do I think we can run back to 2100 again? Yes, but I don't think it's now. I think gold could bounce $100 to $150 and still stay in that consolidative range. Ultimately, I think, as you know, I talked about in January on when I did my forecast, I said gold, 2,500, 3,000 an ounce the next couple of years. I think it's going to be months. So I think gold could strengthen from here and be a bounce. The key for all this is what the heck's going on with the US dollar, which has been under severe pressure. The dollar bounced the last couple of weeks, and now it should level off, maybe pull back. But the dollar, if the dollar begins to really run, that's going to put pressure on commodities like oil, like gold. And it's going to also make it a little more difficult for the equity markets because the dollar has been lately, a good dollar has been a headwind for stocks. So we'll certainly see what happens coming up. But I think it was constructive that NASDAQ didn't take out its low this morning. Semiconductors trading very short term. Well, it's been one of my favorite groups forever. I'm worried if semis take out their recent lows. That'd be a very big concern for me if the semiconductor index, which I can share with you because I can use technology. So let me share my screen. So you can see this is the semiconductor index over the last year and change, but I'm gonna zone in a little closer because I don't care about the March bottom right now. I care more about what's happening lately. So semis, I think if they hold in this 2100 area, that's going to be really important. They break 2100 because they've tried so many times, the bulls, to hold on to 2100. If they break here, my worry is we're going to see a very quick, somewhat elevator shaft kind of decline, maybe back into here, a couple, maybe another 10% lower in semis if they break. So, and I own them and in good size. So if they break, I will have to lighten up my position. I hope they don't break, but I hope it's not an investment strategy. So that's the semis. And those of you who are going to ask me, how come I didn't pull up gold? Well, there it is. Let me give you a little more data. And here's gold. So yeah, 1850-ish this morning we hit. Yeah, we could run back into 1950 to 2000 pretty easily and quickly. I do think this peak will eventually be taken out. This day, I remember I did write gold peaked right here. That was it. Wicked reversal, huge volume, lots of positive sentiment there. That was an easy one to call. So let me stop sharing that and you get back to see my ugly face. So there's my market opinion. There's a couple of election tidbits, some information on gold. If you like what you see in the video, please give me a thumbs up. You're always welcome to email me questions, comments, disagreements, as long as they're constructively critical and not calling me an imbecile or something like that, to paul@investfortomorrow.com. And I'm going to do my very best to get back to doing these on a regular basis. It's fall right now. Boy, fall is my favorite time. I love fall. I mean, right now it's mid to upper 70s, sunshine, lower humidity. It's amazing golf weather. My favorite kind of apples are out now, McCowan's. I can go pick bushels of those, and nothing better than coaching your kids' sports. So thanks for watching, and stay healthy, stay sane, and we will get together again soon. Thanks.